morning and welcome. Patriot Radio News Hour. Joe and Jason on a hump day. And hey, guess what? I'm not going to say, and another all-time record high, at least not yet. I thought we were going to get a pullback. Well, we got so much stuff to talk about. The inflation numbers, yeah, well, surprised to everybody that doesn't listen to this show. Hotter than expected this morning. We're going to break it all down for you. At one point, gold was down like $25 and came all the way back. Silver, boy, get ready on silver. I think silver, the launch party, it's we're on the launch pad. Right. You know, that's what they say. NASA say it's on the launch pad. It's the countdown. Silver well above $28. We want to see that close above 28 and stay there in the Chinese market. So now you got to remember now. We have the London market, we have the New York market, and that's where, you know, all the banks like to control the gold and silver markets. But then Shanghai said, hey, we're going to open our own market. And we're not going to do any of that paper stuff. No, we're not doing that. We're going to do a physical market, right? You want to buy gold, you want to buy silver, you're buying it. Already, silver over $30 in the Shanghai markets. And remember, I told you yesterday, the lunch lady was over there. She was over there trying to get the Chinese to stop consuming and driving up all of these prices. But I'll say this, Jason. Things are looking awfully bullish because it just looks like the commodities run. Nothing's going to stand in the way. I mean, the 10-year note went nuts this morning, above 4.5, and still won't bring the prices down.
Yeah, I don't see prices coming down. Well, here, let's just be historically honest. Prices don't ever come down. Over any period of meaningful period of time. I guess when it comes to technology, electronics, and things that you can scale back, other than that situation, when do prices ever come down? But as far as this higher state of inflation, Joe, now that we've got the March numbers in for the year over year, which is what I like to look at, 2021 when the inflation started really happening, it was April. So now we've got a full 3 years of this higher inflation. And if you add up each month, straight across the entire year, so starting with April all the way through December, and then January, February, March now, going 22 to 24, it's balanced 17% straight across the board for those 3 years. It's just very controlled. Like somebody wanted it to be 17% for 3 years, Joe. And that means with these fixed numbers, which are really cut in half, it's more like 34%, Joe. It reflects exactly what we've been talking about, that since COVID, the emergency that was COVID, if you had $100,000 in the bank, you were only purchasing $65,000 worth of stuff, even though that number says you're whole. You are not whole. There is no wiggle room, Joe. There is no extra bad months or extra good months. You add those 3 months, straight across the board for 3 years now, 17%, very controlled. I think the Fed know exactly what they're doing. I think they know exactly what the system is, and they want to inflate them and their rich buddies into prosperity and on the backs of the average Joe.
Yeah, and, it's so funny when we're starting to see the Fed kind of being trapped here in this inflationary cycle, with no end in sight, really, because I think what we're seeing is very slowly, right, the consumer starting to run out of money, right? Car sales, right? People are really slow. Home sales down 23% from last year. I mean, last year it was down 23% from the year before. People starting to not to be able to afford things. And I think you're going to see some prices go down, right? And some prices continue to rise. And unfortunately, the stuff that's going to rise is the more important stuff. Shelter, right? Housing prices, it looks like they're going to go up another 5%, even though there's no sales, there's no inventory. Why? Because the Fed made it that way. Right? Everyone that could got a 3% mortgage. They're not moving, right? They're not moving. And then you look at things like on the slower side of things, like automobiles, and we had a good buddy of ours. He's a big travels the country with tires, big tire conglomerate, saying, "Hey, tire prices are going to start coming down because everyone's got too many tires, right? Jason, they can't even afford to get a new set of tires anymore. I mean, this is kind of what we're looking at."
Well, it's the electric cars suddenly don't seem to be selling quite as well, right? You know, everybody's got to get a Tesla. Now Tesla's showing a little bit of weak sales. I mean, it's all about the non-essentials. You know, everybody needs a set of tires. Everybody needs windows for the house, but those are items you can put off. You can have a really bad set of tires and just drive really, really extra specially nice. You become the guy on the highway that everybody has to pass because you don't want your tires to wear down too fast, or worse yet, you run over the wrong thing and it pops. Same thing with, you know, all kinds of, you know, the durable goods, right? Who's going to buy a set of furniture right now? Right. No, you'll just use the chairs you got, right, Joe? But you have to eat, you have to heat or cool your home, you have to make the mortgage or rent payments, and these things are still going up. These things are going up, and everything, you know, everybody is skimming out on everything else, Joe. And we see it here with the gold company, too. A lot of the smaller buyers are having trouble buying, and some of the ones that might have overbought, they're coming back and they're selling it. At least they have it, right, Joe?
Yeah, amen to that. 800-951-0592. When we get back, we're going to talk about CPI, the cost of a postage stamp getting ready to go higher. We'll tell you all about it. 951-0592. Joe and Jason on this Wednesday. A quick look at the markets. The Dow's down 450. The S&P's down 54. The Nasdaq's down 178. And again, the year of chaos here. This is one of those things where Wall Street, they need the rate cuts. If they don't get them, right, we're going to see, you know, like I said, how close are we? I think it's close. One little slip here, and we could see a quick 2,000, 3,000, 4,000 points come off the Dow very easily here. The 10-year note at 4.5% on a 10-year note. Before the inflation number came out, it was at 4.35. And I know you're like, well, 4.35 to 4.5, that's not that much. That is huge when it comes to Treasury, the most liquid market in the world, as they used to call it. Not a great sign there. Crude oil, it's down a little bit, but inventory reports were out. Not good. Very extremely low inventories, especially on unleaded gas as we're getting ready to head into the drive time here. Gold right now, so gold's been moving all over the board. Right now it's down 10 at 23.33. About 15 minutes ago it was up 7. About 2.5 hours ago it was down 25. Silver right now up 13 cents, $28.12. Silver's been as high as $28.65 this morning. So we'll continue to watch this. But again, get ready, get planning, quit sitting on your hands. You need to plan. Just look out 1 year. Where are we going to be 1 year from today? Where are we going to be? Who's going to be the president? Man, I don't know. How bad is the debt going to be? How much bigger are the Treasury auctions going to be? Can the Fed lower rates, stop quantitative tightening, right? Maybe go to quantitative easing. All of these things. Who knows? Jamie Dimon says, hey, don't be shocked if they've got to go to 8%. What do you think the Dow will look like the East? I hope not. Man, yeah. I truly don't. I don't want to see that. I don't. Be diversified. If you've got $50,000 or more, you need to call Y Refi. Up to 10.25% fixed rates of return. Are you kidding me? You lock in for 5 years, you're going to get 10.25% every month. Month after month after month after month. And you don't have to worry. Well, what if this and what if that? And what if the Fed makes a mistake? What if the Middle East breaks out, or who knows? We gotta go into Ukraine. It doesn't matter. 10.25% fixed rates of return. You can turn your income on. You can turn it off. There's no fees. They don't attack your principal if you need your money back. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or call them at 888-Y-REFI-24. The post office today said, hey, yeah, we're going to have to raise prices again. What? I don't know why they just don't get this over. I mean, people still use the mail, I guess, a little bit, but they're going to go from 68 cents to 73 cents starting this summer. So the post office is saying, hey, inflation here, I don't know about the Fed, right? I don't know about them, but we got like 8% inflation here at the post office, right? That's what they're saying. We got like 8% inflation that'll take effect on July the 14th, and I think that's really probably the number. But the numbers we got today, let's go over them. So we had this was the CPI. This is kind of the big number of all the inflation numbers. Headline. Remember I was telling you yesterday, they wanted 0.3. That's what they want. They didn't get it. It was 0.4. So, and again, you say, well, if you did that every month, that would put inflation at almost 5%, right? Way above 2. But it came in at 4. The year-over-year number, because they've had some small numbers. Remember towards the end of last year when gas prices went down like they normally do, and they were like, oh, no, we're Janet Yellen. Oh, yeah, housing's going to go down any day now, right? Didn't happen. But 3.5% year-over-year, that was also hotter than expected. So think about this. Nowhere close to their 2% mandate. Then when you take the core, right? So the core number also up 0.4. By the way, the core at 3.8%, so almost 4%. So essentially, inflation with the core double what the Fed has been telling us about. And inside of it, there was a mixture. There were some things that went down. Unfortunately, the stuff that went up is the important stuff. The index for shelter up big again. Obviously, gasoline was up. Energy up 1.1%. They said food was up just a little bit at home. If you wanted to go out to eat, nope, that was up another 0.3%. We'll see how the restaurant industry starts faring here as, again, I think gas prices and insurance and rents and all of these things eat away. All items less food and energy. Right, this is one of the big Fed favorites, right? I call it the homeless person index, up 0.4%. They said big increases in shelter, motor vehicle insurance, medical care, apparel and personal care, all higher. The things that were down, used cars and trucks, recreation vehicles, and new vehicles. So outside of vehicles, Jason, everything else was hotter than the Fed wanted it to be.
I think your month-over-month 3.3 is I think that's the new norm now. So I think 0.4 is not happy because that's a little higher. But you look at the year-over-year numbers, we're 2 months shy of being in the threes for an entire year now. And if you look at previous years before 2020, 1.6, 1.5, 1.9, 1.8, 1.7, 1.6, we're doubling that. I mean, we said years ago that it looks like that they may just double what they want for the inflation, and they didn't say that as a target rate. But what kind of minor emergencies or major emergencies over the next year are we going to have? And suddenly it's like, well, we should be happy it's in the threes. Look at all the emergencies going on in the world. This is just the way it's going to have to be. It's astonishing, Joe. It's really under control. The verbiage isn't. You never know what they're going to say from month to month. But if you look at it, it's been a nice wave up with the inflation. It's kind of come back down. Is this their soft landing? Their soft landing is year over year 3 to 3.5%. I mean, every month, if you look at the previous year, that it dropped big from the previous year. This year it goes up. All the months where it didn't go down very much or not at all, it goes down. And so there is a very fluid situation to what they've done. And, Joe, if inflation stays like this, they will cut rates. They will absolutely cut rates and try to get all their Wall Street buddies a big, huge thumbs up. And then we'll see what happens. We'll see if the inflation decides to push past this and that 0.4 or 0.5 month over month. Maybe they feel like that they'll have control over it or something. I don't know. Whatever it is, it just means that we are going to have less. I mean, everything's going to go up twice as much. Now, everything's going to cost twice as much, but it's going to go up twice as fast as what the last 20-something years of how bad inflation really is. It's exactly why you have to buy things that hold value, and gold and silver, especially gold, is just the ultimate place to hold value against this sort of thing. And look at the gold prices, and they're just going to keep on going. Gold's going to ebb and flow too, but I have a feeling it's going to be moving pretty fast as what is going on.
Well, I think you're right about it. We're going to get quantitative tightening, a slowdown there. That's going to probably be at the next Fed meeting, and then they're going to cut rates. They shouldn't, but they're going to because they have to. This is getting to an extremely critical point. We had another terrible auction yesterday in the 3-year note. And today, I think today will be a really good auction because look how much higher the prices are. Right? Hey, wait, I'm going to get a lot more bang for my buck today on the Treasury markets because these auction sizes, they're just off the charts. $58 billion in 3-year notes. In every auction, it's 40, 50, 60 billion dollars that we have to sell every single day, and the pace at what the debt is growing, it's really getting to be an astronomical level. How about Costco yesterday? Wells Fargo out with a note. Costco selling $200 million a month of their 1-ounce gold bars. $200 million a month. And Costco's like, well, we could probably sell more. We just can't get enough. Right? This is the type of stuff that people are seeing it. They're recognizing it. Who would have thought, if you would have told me 20 plus years ago, hey, people are going to buy gold at Costco and Walmart. They're going to buy gold and silver at Costco. I'm like, what, jewelry, necklaces, right, rings? No. Right? They're going to buy. That would have been unheard of. And now they're talking about, think about this. Costco's doing that kind of volume every single month. You're talking about, what, like 40, 50 metric tons of gold just from Costco, Jason. I think this tells you where the American consumer that has extra money, this is what they're seeing. Right? They're seeing this, and they're seeing the action, and they're seeing what's going on in their households. They're seeing what's going on with their kids or their grandkids. They're seeing what's going on with their friends. And Jason, they're waking up and waking up in a big way. And like I said, when we go to the pure physical markets of China, prices are even higher there than they are here.
And this isn't like the zealousness of the 08 housing crash, where by 2010, 2011, 2012, you had like every mall in America had somebody with a "We Buy Gold" sign, and it was overbought because, hey, they were secretly printing $29 trillion and handing it out to everybody. That on its face is not happening at this moment. So the gold is going up now, and there isn't, this huge plunge into selling gold from someone like Costco is showing you that this is a real price-driven rally in commodities, and this isn't 2011 where it just goes to 1900 and crashes down the next few years. This has a lot of room to run, and even if it does pull back, because at some point it could get overbought, it ain't going to go 1900 down to 1100. It's not going to lose 40% this time. It could get overbought. Yeah, if people really start going crazy. I mean, Joe, I wasn't around in 2010, 2011, 12. My guess is your phones were ringing off the hook. That's not what's happening this time. This is a much different situation, and when gold keeps pushing and the price keeps pushing and the price keeps pushing, I don't think we're going to see a gold price crash this time around. I think with this higher inflation, it looks like they want to have inflation at a doubly high rate at best. That means gold is just going to go up faster than in years past. We're not going to have gold kind of hanging around 800, 900, 1,000, hanging around 11 or 1,200 for years. 2,300 gold, 2,400 gold. If things were so-called nice in the news cycle, we'll get $100, $200 on gold every single year, no matter what, just with this inflation that looks like it's going to be permanent, Joe.
Well, I think that's a great way when you look at it, because it does look like the Fed hasn't said it, but it sure looks like they're fine with 4% inflation. That's just what it looks like. We've been in the mid to upper threes for a year now, and they're talking about cutting rates. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. Right now gold's down 5. 23.38. We'll see, as it continues to just shake off seemingly any kind. And it doesn't matter what the news, good news, bad news, nothing news. Gold is just going crazy right now. I'm going to give you a great opportunity, because I honestly think we're going to see gold end higher today, probably the rest of the week. I hate to say that, but that's just what now it's down 3. Here you go, 23.40. $20 gold pieces, 1 through 19. You're going to save $45, 2,550. 20 or more, $2,535. That's less than $200 over spot. 50 or more, $2,525. Silver, be patient. Some of you, if you order early and get in early, you'll get it faster. Silver, the supply is starting to dry up. Right now, silver's up 25 cents, 28.23. U.S. Silver Eagles today, $730 a roll. You're saving $20 there. Buy 25 rolls or more, $725 at 800-951-0592 and start stacking it here. I know the soft landing that they talked about isn't happening. It's not coming. Instead, I think what they're going to leave us with double the size of inflation, with deficits that are massive. And when that is the situation that I think we're in, where could we actually get quantitative easing with interest rates not at zero? That's supposed to be an all-out no. No, you're not supposed to. Jason, we actually could, if these treasury markets continue to have these types of problems, we could absolutely see that.
Yeah, I mentioned that. Man, I think it was maybe almost 2 years ago. I mentioned it to you the first time. I think we're going to have higher rates and they're going to print. If I could see it when you were listening to it, how it does not compute. That is not That is not what you do with normal economics. But we're not in normal economics, so abnormal things are going to happen. And I think that's why you got so many people predicting so many things across the board. I mean, Jamie Dimon's got everyone thinking there's going to be an inflation hurricane. And if he's right, if there is an inflation hurricane coming, then he's right. We're going to raise rates. That's what the Fed will have to do. And things are just going to blow up. But if you look at the month after month after month, the year-over-year numbers, and then the number you mentioned today, Joe, it doesn't seem like inflation has that emergency setting as far as average goods and services. I wish the number would be computed with the things we actually need, like food. But we're going to watch it, Joe. And if they drop the rates a quarter point or 2 quarter points and things are going kind of crazy, they'll print. They'll just print. They'll print like crazy. Let's just say we get down to 4.5% Fed rate, and if everything's blowing up, the Fed will print. And you're right. I mean, is that supplemental leverage ratio rule going to just be put into place so that the big banks can save themselves, and then when things get really bad, they get blamed? I mean, that really seems to be the next step, Joe.
Well, yesterday's auction, the banks got stuck with the not the vast majority of it, but well over 20% of these auctions, and that's unsustainable. Like Jason said, unless they change the rules that says, okay, banks, you can hold even more treasuries, and that's kind of really an interesting problem because treasury debt, that was considered the best debt, right? That's tier 1. It doesn't get any better than that. And now, all of a sudden, is it the best debt, right? Is it something where, hey, if I buy a treasury that's giving me 4.5%, but inflation, you're saying, the Fed's saying, well, it's 4%. Well, maybe it's really like 8%. That's not such a great thing. I think this is why Jamie Dimon's saying, listen, I don't know. We could have rates anywhere from 2 to 8%, right? And it just depends, right? What is the Fed actually? Is the Fed going to fight inflation, or is it not going to fight inflation? That really is going to be the question. And here's what gold is saying, and silver's saying it too. We don't care. You pick one, right? You pick one because you're trapped and you can't get out of it, and the rest of the world. And really, Jason, doesn't everybody kind of know it?
I think so, Joe. I think so. And there is one entity that seems to not care about debt or the rates, and that's the federal government. That's why this leverage, this supplemental leverage ratio rule, this is why it makes so much sense, because the federal government, how are they going to pay? How are they going to pay this? Well, if there was untold amounts of money to just keep on borrowing and there was just no limits, the federal government will do it. And this is the only way to do it, with the Fed kind of washing their hands of it, right, Joe? They're not going to announce this rule when it's back in place. We didn't really hear about it when it was in place for a year, from March of 2020 to March of 2021. We didn't hear much about this. It just kind of got its toes wet. They kind of experimented with it, and this worked pretty good during the little emergency. Well, another one of their little tricks, right? And this is, Joe, you always talk about, how are you going to pay this? How are you going to pay this? Well, if you have untold amounts of free liquidity, just come in there and, just pay this higher rate. Who cares that that's $50 trillion? Who cares that that's $55 trillion? The federal government doesn't care if it's $55 trillion. They need to pay all their buddies, right, Joe? They need to repay all those favors for the last election, the re-election that they got. And man, what time frame of that kind of irresponsibility will it be before things really blow up? And we can always hear Agenda 2030 and things of that nature. I mean, is that what we're headed for? Put this rule in place, let the banks spend themselves into oblivion. We end up with, instead of 4,000 banks, we end up with 500 to 1,000 banks, and a massive, major economic crash, and the Fed will just dance right in. Oh, well, you bad banks. You federal government, you're so irresponsible. We'll fix it for you. Doesn't that just seem like where we're headed, Joe?
That's exactly what it seems like. That's what it's certainly what a lot of people in the markets are talking about, that rule coming back pretty soon. So we'll keep our eyes out. Patriot Radio News Hour will be right back. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday, the first day at least so far in the last several weeks where we're saying it's not a new all-time record high, at least not yet, for gold. Right now, gold's down $2 now, $23.41. Silver's up 22 cents, $28.22. Rolls of silver eagles, $730 a roll. If you buy 25 rolls or more, $725. Physical silver markets in Shanghai now above 30. And again, we're watching $28 here. We get, if silver can close above $28 and stay there, have it stay there 2, 3, 4 days. Jason, don't be surprised if silver very quickly adds another $2, $3, $4, even $5 in short order. $20 gold pieces today. Big sale here. 1 through 19 save $45 at $2,550. Buy 20 or more, $2,535. 50 or more, $2,525 at 800-951-0592. And Jason, the lead article on All American Gold, canned meat sales skyrocketing at the grocery store as consumers are out of money. Spam, sloppy joes, Vienna sausage. They're talking about a 20% increase in those items at the supermarkets right now. The consumer's tapped out.
Those are inflation protection situations there. That's load the shelf up. Spam can sit on that shelf for a while. People are getting ready for the inflation. Boy, people are starting to get it. I guess, Joe. That's an indication people are starting to get it. I'll have to say this: today is a very strong indication, a very strong indicator of this commodity rally. This is sometimes. I've said it many times that sometimes. You can have a housing crash, for example. If your house goes up over the course of a year 5%, but everything else goes up 25%, that's your house price actually taking it on the chin, even though your little number looks better. Today, if you look at the markets, oil's down 0.1%, gold's down 0.15%, okay? But the Dow's down 1.29%. The S&P is down 1.15%. These moves make a difference when 1% of the market is still falling behind gold today. So this is really kind of a gold up day when you compare it to other market factors. This is still a gold up day. It's disguised. There's profit taking. But if you were holding it all in gold or all in the Dow, you're 1% better in gold today. So you're still better in gold. This is a huge indicator on a down day how strong gold is, Joe.
Well, and I'm just looking.
It's not even down that much.
Yeah, the Japanese yen, the highest now since the mid-1990s, 153. Look out here. I have a feeling we're going to get some intervention by the Japanese central bank tomorrow as the 10-year note 4.51 now on this higher inflation, and again. Another indicator of things breaking down here. And when we talk about gold and silver prices, the yen, still, let's call it still a major currency in the world. And really, on the verge of collapse here. This is something now where we've been speculating, are they going to be able to keep control of it because it's not a reserve currency? A lot of people out there are ditching the yen for the Chinese renminbi now, because the old yen carry trade is breaking down here. And Jason, it's just another indicator of things to come. And how about, we talked about car sales slowing. $1,400 SUV payments, $1,600 truck payments now are starting to become common. This is crazy. We just talked about, 20% of car payments now are over $1,000. And now people are saying, hey, you know what? $1,400 to $1,600 car payments, not that crazy anymore. I mean, that used to be a mortgage payment.
And how many car loan defaults are we going to see if a slowing in the markets causes the car prices to come down because they just can't sell them? And you're sitting there looking at your $1,500 truck payment, and you're like, well, what am I paying this for? That truck's $10,000 less than mine, or $20,000 less than what I got. These are the kinds of things that give people exhaustion in their day-to-day economics, and make people start to make decisions, Joe, that, hey, you know what? People get to that position. Bankruptcy is my best option. And, man, when you get a lot of people getting into that mindset, that's when you see the markets crashing. I mean, we're seeing it. We've been saying this for 2 years. We're looking at a slow market crash. It's just moving really slow. And look how slow it's moving. Things have not gotten better in 2 years. They've just slowly deteriorated, Joe.
Yeah. Dow now down over 500 points now as, again, inflation coming in hotter than expected. The market needs these rate cuts. The banks need these rate cuts. Heck, the consumer is saying, we need these rate cuts. We can't afford, and we've been talking about this forever. Forget about buying a house now. A lot of these consumers, we can't afford a car. Right? And if we do, it's got to be a used one, and it's got to have 200,000 miles on it, right? And that's the situation that a lot of people are in. And this is what everyone's reacting to, because they see, hey, the bubble, I don't know when it's going to burst, but boy, it's getting closer and closer and closer to it all unraveling. That's where you got to have that gold and silver put away. We'll wrap it up today. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Wednesday. The Dow, again, down 500. The S&P's down 60. The Nasdaq's down almost 200 points as the 10-year note at 4.51. And we're at a strong commodity performance today. Commodities should be having a major sell-off. Crude oil just went higher. As I told you, gasoline, there's just not enough of it. Silver got as low as $27.65. Is that going to be the new low high here? Or is that it? I mean, was this the sell-off? Was that all there was? That remains to be seen, but right now silver's up 20 cents above $28. How about copper? Copper, it's down 2 cents. That's it. 2 cents, and the dollar's roaring today, especially as the yen is falling apart. And gold, $23.25. That was the low today. Is that going to be the new higher low? Again, remains to be seen. We don't know, but not very bad. I was expecting a much bigger sell-off than that, but it just shows you the strength across the board and again, not enough of it out there, and huge demand from big players in this marketplace. Right now, gold's down 5 at $2,338, but we've got a huge sale on $20 gold pieces, $45 off. And gold's essentially, yawning today. 2,550 by 20 or more, 2,535 by 50 or more, $2,525. That's $70 off. And then on silver, $730 for a roll. By 25 rolls or more, $725. And like I said, Silver's already over $30 in Asia, and I think, Jason, we could be talking in a matter of days the same thing here in the United States.
Yeah, if silver holds strong, especially over $28, I've seen several prognosticators say that's an indication of watch out, here it goes. And next week we could be talking $31, $32 silver next week sometime, and that's how fast it can move. And silver does. So when silver's expected to move fast once in a while, right, Joe? It's just gold is not expected to move like this. So if gold is a tortoise that suddenly got some running shoes, then what is silver, the rabbit, going to do to do what gold is doing? Because silver follows. So we'll wait and see. But yeah, we got 2 more days this week, and if you have silver closing above 28 on Thursday and Friday, you might want to load up. Maybe Friday we'll have to find ourselves a really good silver special, because it could really take off next week.
If we get a huge down day on Wall Street, like Dow down 1,000, 1,500, maybe we can get some profit taking on gold and silver, right? Maybe we get some profit because guys, hey, I got to offset some losses with my gains in the gold and silver. Maybe it's kind of weird to say that, but maybe if we could get some really big losses on the Dow, we could get a better correction. But at least right now, gold and silver are saying, yeah, we don't care. Higher inflation, lower inflation, no inflation, market crash, no crash. We're heading to the moon right now. 800-951-0592. Jason and I, we're going to be right back with the half.